Welcome to the Wealthies Circle podcast, where we take a deeper dive into this year's finalists and winners from our wealthmanagement.com industry awards. These interviews cover the challenges, innovations, and trends in the wealth management industry and the individuals working to help advisors better help their clients.
Joining us today is Jennifer Grzech, the Senior Director of Responsible Investing at Nuveen, and James Katz, CEO of Humankind Investments. Welcome to you both.
Thanks for having us.
Nice to be here.
And so today we're going to talk about socially responsible investing in the year 2023. And what we want to know and what we're going to talk about is how sustainable investing has been in the news lately. Are companies really able to quantify what they're doing? Jen, let's start with you.
I think they definitely are. It's certainly been a challenge. Some factors are more difficult to quantify than others. However, as an investor that owns, a lot of different companies, we actually are very focused on these companies when we're looking at ESG issues, being able to tie whatever they're doing to their business strategy. And I think that requires quite a bit of introspection and quite a bit of analysis. And I think the data and technology that we have now allows for a lot of innovation around what you can measure. And it's many things that people previously thought were unmeasurable. Carbon footprint is something that we've seen expand in coverage across the universe of companies that we invest in. We see increasing numbers of companies publicly disclosing their employee demographics and even their board composition. So there are measurable components of many of these ESG factors. And I think we're just kind of at the tip of the iceberg in what we can do potentially.
And what do you think, James?
I think it's pretty early days when it comes to quantifying every human impact that a company has. The way I see socially responsible investing, it's about thinking about not just the investment returns that you get in your portfolio from, in terms of what these companies are giving you as an investor, but also how the companies are treating you in other areas of your life as a customer, as an employee, as a member of society more broadly. So trying to quantify and value what companies are doing for you outside of your portfolio, I think is a new, relatively new concept. And the quantification of that, I think, is in its very early stages. I think I agree with Jennifer. One of the places where I think quantification has happened, the earliest is in the carbon footprint space, but I think there's a lot of other issues that impact people where, we're just sort of getting started, and putting these things in like terms, I think is often difficult. People could raise the question, how many cigarettes smoked equals 1 ton of carbon emitted in terms of how much damage, these things are doing to people. And so my take is that if you can convert all these different impacts on humanity into, dollars and cents in economic terms, you can actually get a sense of what the relative impact of these different issues are, and also how different companies ultimately impact humanity.
So what are some of these, do you have an example of some of the things that you were saying, outside of the actual company and the investment?
Sure. So a good question that people would have, say, let's give an example. A company is creating value for its employees by providing them with jobs, right? And paying them well, hopefully treating them fairly, or it could actually be taking value away from its employees by engaging in wage theft potentially, or discriminating against them. Putting dollar values on those sorts of economic impacts can help us understand how important those issues are in that company relative to, say, the product that it's creating and what good or bad the product is doing. So when the company's selling the product to customers, there's some additional value that the customers are getting from that. What's the size of that value? How important is the product to people in terms of their well-being? So putting dollar values on these different impacts, comparing, okay, what does it mean that a company, let's say, maybe mistreated one employee, right, to a certain extent, with a certain dollar value of damage associated with that, weighed against the fact that maybe it's a healthcare company that's saving hundreds of thousands of lives every year, right? So putting these things in like terms, I think, and bringing everything back to maybe dollars and cents. That's how we do it at Humankind Investments. I think gives us the possibility to really understand more, not just whether or not something good or bad is happening at a company, because there are good and bad things that happen at every company. It's really just a question of how much good and how much bad, is happening, and whether the good is outweighing the bad or not.
I just wanted to say I really relate to what James was saying, because benchmarking, and I think that's a little bit of what he's talking about in terms of, if you have a number out in the world on something, some metric, it's very hard to contextualize that without other information from other companies or an understanding. So say if we are talking about climate change and a company releases their carbon footprint, how do we know what that company needs to do to reduce its carbon footprint in alignment with, say, a 2050 net zero commitment? And what would be expected for that industry? So I think we've been encouraged by the number of organizations and standard setters that have been helping us to benchmark some of these metrics and say, and provide that kind of context to a company's reporting, where it's not just a floating number, but it means something. And then another thing I would add is that, particularly with the social metrics that I think James is highlighting, we see a lot from companies in terms of inputs rather than just outputs, which we would like to get to the outputs rather than just company has an anti-discrimination policy or company does XYZ. That's great. That's a measure of accountability. And we like to see that intentionality. But then we also want to know that the company has a plan to measure the success of those inputs. So if you have this policy on anti-discrimination, how has that impacted, maybe a lower number of incidents that are happening? Or if you have a diversity and inclusion initiative, has that improved your retention of diverse talent across various job levels? So I think getting to not just the ESG inputs, but starting to bridge to the ESG outputs of some of these efforts has been really important for us to communicate to our portfolio companies when we're talking about some of this stuff.
Yeah, I agree with that completely. It's sort of, brass tacks, like, okay, it's very nice that you say that you have a policy, but what are you really doing?
If it's measurable is what you're.
Well, of course, but at least to report on the outputs, to say, we had this anti-discrimination policy, and then workplace harassment incidents went from, X to X minus 50% or whatever.
Gotcha.
I think it's like any other business project. And I think that's why companies shouldn't be thinking of it differently or as an aside, but you would never undertake a business project and not have identified some measures of success. And so I think the same thing applies to sustainability focused initiatives or any other environmental or socially focused efforts.
James, do you find that millennials are still having as much interest in SRIs, or is it continuing to lean one way or the other?
Anecdotally, I think that millennials tend to have more of an interest in socially responsible investing. I think it comes from having more access to information. I think the internet's been a big part of that, just being able to identify that companies impact us not just in our investment portfolios as investors, but also in other areas of our life. So naturally, we ask the question, okay, fine, a company can make me money as an investor, but what else is it doing? And you're constantly reading articles about what companies are doing. You're seeing information online about how companies are impacting the world, and you want to know, as a millennial growing up in this information environment, typically you want to know, what can I do about this? How can I make it so that these companies maybe treat me better, not just as an investor, but also as a human being? I do think that interest is sort of endemic to our generation. And the question, is it still interesting to millennials? I think there's probably been some disillusionment as concerns about greenwashing have been raised. I think that's only natural. I personally, sympathize with, the concerns, I think, but I would say I don't think that's a reason to be disheartened. I think it's just a reason to double down on our efforts to get it right? And to make sure you choose the right partner when you're trying to figure out how to invest in a socially responsible manner.
And Jennifer, what do you think?
So we've actually undertaken investor surveys on an annual basis at Nuveen, and we publish those results. And we do show that younger generations are much more engaged and have much more interest in sustainable or ESG focused or impact focused investment. I do think it's been a very interesting year in terms of some of the divisiveness that's kind of evolved around ESG, and it's coming from both sides. You have some people who have the feeling that this is politically motivated, which I would argue against. And then you have some people who are very concerned about impact washing and greenwashing. And those are very valid considerations. I do think overall, though, we've seen with the challenging market environment where generally fund flows have been negative across conventional funds and also across sustainable funds, just because this is the cycle we're in, the sustainable funds have actually had a little bit more staying power and have exhibited more resilience based on some of our analysis. And even our own funds, we've noticed, have been less negative in terms of the outflows. So I think the signs are still for growth. And I think, there are reasons to be heartened in terms of the credibility piece. Regulators are starting to scrutinize how ESG products and impact products are labeled, and the EU is really stepping up in terms of what we are required as an asset manager to disclose in terms of what our funds are saying they do and how we're substantiating those claims.
So are the investments kind of matching what people are looking for, or is there something missing? James, let's start with you.
That's a good question. I think probably one of the biggest issues in the ESG space today is that there are a set of funds that are designed really just to purely profit their investors, and really just they just have investors in mind. And when they say that they're ESG funds, they're what they mean is that they use ESG data to reduce risk to investors. So like an example would be, maybe a company could get a better E-score because it moves its factory from the coast to up in the hills, so it's less likely to be flooded as a result of rising sea levels. But does that mean that they're polluting any less? Are they working at all to mitigate climate change? That definition of ESG, when thinking just about the bottom line for investors, is I think what many investors are not looking for when they're coming to the table trying to invest in an ethical manner, in a way that's going to try to make a positive impact on the world. So I think I do think that there exists this mismatch in some cases between the goals of the investor and sometimes the goals of the fund that they're investing in.
I would agree with that. I think there's some of it gets back to the question about measurement, and I think impact has been incredibly difficult to measure and to measure credibly. And then to attribute, so say with a public equity portfolio, that is much more difficult for us to measure the attributable impact versus, say, a debt investment, where the use of proceeds for that financing has a specific impact objective. So we can more directly tie that capital to the actual end impact. And then I would say too, I agree with James about the ways in which ESG has been perceived. I think you have ratings providers that do exactly what James was saying, is they measure how a company is managing its own ESG risk. And as an investor like Nuveen, where I think James's company has a very specific mandate, our mandate's a little bit broader. That is a useful lens for us from a risk perspective in particular to view companies in this way. How are they managing their ESG risks? But we also recognize that clients increasingly want funds that are generating sustainability outcomes, that are generating positive things for people and the planet. And I think that's where there's opportunity to increase the rigor and opportunity for more growth and innovation, because we've kind of let ESG be conflated with impact, and that needs to stop. So I think there are ways we can be more clear with our investors and educate them about the differences with some of those different approaches.
So Jennifer, how much of a priority do you think it is for companies and these funds to make that something that they definitely want to change? And I know you've been talking about growth. How important do you think it is for them to continue that?
Generally for Nuveen, I mean, we try to, when we interact with portfolio companies, it's really about positioning impact as opportunity. I think there are a lot of really compelling market trends that are driving sustainability as an important value driver, not just for companies, but for society at large. So I think if companies can increasingly lean into that, and again, identify in their business models, in their strategies, where there's natural fit, rather than trying to force something. I think that's where we see a lot of greenwashing actually, is when companies are doing something disingenuously or as kind of a side project for optics, rather than thinking critically about how does this fit into my overall business vision, and how can I be part of these solutions, and how can that align the corporate best interest with the best interests of these external stakeholders. And I think that's where you land on authenticity and credibility. Again, rather than viewing it as some kind of marketing exercise or PR exercise.
Do you find that to be a problem in authenticity?
I do. I think with the level of regulatory scrutiny, with investors becoming more sophisticated and really leaning into some of this and thinking critically about where greenwashing might be happening and hearing about it, I think it's happening a little bit less, but it's still certainly a problem.
And James, what do you think? You can chime in on the whole thing.
Yeah.
Just the last part.
Yeah, we covered a lot. So I think, so at Humankind Investments, the way that we see, investor interest is a bit broader than I think one would traditionally think about it, right? We have all kinds of rules in this country to make sure that companies act in their investors' best interest, to make sure that the management of the company isn't taking the company in a direction in a way that's going to hurt their investors' interests. But the way we kind of have traditionally defined that is just the investors' interests as investors, only in how the company produces profits for those investors. I think society would be in a better place if we thought about investor interest a bit more broadly, if we thought about how investors benefit from the actions of companies, not just as investors, but as human beings, because investors are never only investors. We're all people. We all live in society. Many of us work for the companies that we're investing in. Many of us buy products from the companies that we're investing in. I argue that we'd be better off if companies behaved in a way that was good for their investors, not just as investors, but as human beings. And I think that perspective is I think kind of the logical conclusion of where all of this is headed. This idea of responsibility, right? Responsibility to whom? It's responsibility to people, to humanity. And so the way that I see this going, I think as people get more educated about the issues at play and how companies are impacting them in other areas of their lives, I think they will likely seek out solutions that meet that need, that try to encourage companies to act in ways that are good, not just for their bottom line, but also in a way that will sort of benefit their investors as people. I think from a financial materiality perspective, one can also make the argument that by treating all the stakeholders well, things can kind of come back, and there's sort of this idea of what goes around comes around. You can call it karma, but if you believe that, then there really may not be much of a conflict in terms of what the companies are doing for the bottom line and what companies can do for humanity. That's how I see kind of the future of ESG.
Okay. Jennifer, is there any advice that you have for investors that we haven't discussed in today's podcast?
I mean, I think more than anything, again, I'm encouraged by the continued interest in this area. I think it's evolved rapidly in a very short period of time, and I think it will continue to evolve rapidly based on the investor interest, based on the regulation that we're seeing, based on the societal imperatives to decarbonize the world and transform our energy infrastructure. So I don't think these big themes are going away. So therefore, to James' point, I don't think the investment interest or the expanded understanding of how investment can address some of these issues is going away. And I would say for investors that are very interested in this area, I would take a critical lens. I would maybe be a little bit of a skeptic. I think there are good actors out there, and I think there's, again, still some greenwashing. So in the same way that you might think about this when you're buying a product that says it's eco-friendly, well, what does that mean? Can I do a little bit of research to determine if that statement is verifiable or credible? I think you have to do the same thing with your investment products. What is the product saying that it's doing? And is there a way for me to verify, that that's the case? So I really think that investors can aid the evolution of this space in a really important way by being critical and being thoughtful.
And James, any parting advice from you?
Yeah, and I agree with that. I mean, I did mention, right, I think probably one of the biggest issues out there today are funds that say that they're sort of ESG risk driven. And that's true, right? They're ESG risk driven, but the risks is really only to, investors as investors, just in terms of the bottom line of the companies. I think if, there are investors who care about making a positive impact and they're coming to the space for ethical reasons, for societal reasons, to make sure to take a look, don't just say, oh, ESG, that's fine. You kind of have to, like to Jennifer's point, you have to read a bit further to say, okay, so what does that mean here? Are they saying that it's ESG, but only to the extent that investors are profiting? Or is it ESG from the perspective of trying to make a positive impact, trying to get a sense of what's going on? I think there's probably some shorthand tricks, right? Try to get a sense of what the mission, not just of the fund is, but also of the investment advisor to the fund, right? Is this something that's just, like, to Jennifer's point, again, a side project, or is it, the whole purpose of the investment firm? So I think that's something that investors should think about as they're navigating the space.
Fascinating. I feel like I've learned so much today. So thank you to Jennifer and James for joining me. And thank you to our audience for listening to this Wealthy Circle podcast. For more Wealthy Circle podcasts, visit WMTV on wealthmanagement.com.
This content has been made for information and educational purposes only. The views and opinions represent the views and opinions of the guest and does not necessarily represent the views and opinions of wealthmanagement.com.